Hey, what's going on, guys? This is Brandon, your trusted realtor, and I'm coming to you with another great episode. Today, I want to spend a little bit of time talking to you about student loan debt. And yeah, a lot of Americans and a lot of people deal with this day in and day out. Most recently, the CARES Act has put a lot of Americans in a situation where your student loan debt has been deferred, or there's a level of student loan debt forgiveness. And part of the challenge there is, how do we now navigate the waters of purchasing a home and having our student loan debts forgiven? How are, or at least temporarily forgiven? How are lenders evaluating the landscape, and will I or am I still in a place to be able to purchase a home? The long and the short of this is that a lender, not yourself, should be the person who helps guide you through that process. I most recently wrote an article that buying a home, or that your home ownership goals, is greater than your student loans, and I'll leave a link to that here in the description. But there I talk about how there are options that are available to you, and we talk about how specifically lenders or mortgage institutions begin to evaluate you. A lender's going to be looking at least 1% of the amount that you're paying in your student loans, and if it's an FHA loan, they're going to be looking at 0.5%. Of course, that, depending on the loan type and your situation. Everyone's situation is going to be unique, and everyone's opportunity as it relates to what action they can take towards their student loan is going to be different. The best advice that I could give you is to talk to a mortgage professional. Many times the psychology of our student loans puts us in a place where we think, Many times the psychology of the student loan puts us in a situation where we think that we are not going to be able to get past the debt to income ratio or circum that. But I feel like for every mountain, there's a way through or around it. Choose your preposition. And in this particular case, there's options, whether it is leveraging the financial forgiveness that you're being afforded via the CARES Act, or refinancing your existing debt. Now, it's very important before you decide to jump on the phone and go down either one of these rabbit holes, that you talk to a mortgage lender. And the reason this is going to be important is because a mortgage lender is going to have the tools to tell you the best route that you need to go to navigate this. I talked to a mortgage lending friend of mine, Ryan Paquin, who's the managing broker for the Paquin team. And in this particular case, he gave a lot of really good specific advice that I document, or I talk more about in my article. Namely, making sure that you have a clear sense of the pros and cons of the actions that you're going to take, and what specifically your student loan terms mean. Right now, you're in deferral. So depending on the type of financing that you want, or that you want to pursue, whether it's government backed or it's a conventional loan, it's really going to impact the strategy that you need to employ. And it may be a situation that even if right now you're best qualified for a FHA loan, that because of the student loan debt you have, whether it's government backed or it's through a private lender, it may be an ideal situation for you to increase your credit score and get a conventional loan, a conventional mortgage loan, so that way you're in a better situation as it relates to how that monthly mortgage payment or that monthly payment is calculated in regards to your student loan debt. There's lots of different moving pieces here, and no one ever said it's easy. But at the end of the day, the mortgage process begins with you having a plan. One of the plans or opportunities to help to not really cure your mortgage debt, but to put you in a more stable place, is that if you have a lot of diversified student loans, consolidating or compiling those into one place, especially if you have private student loans. And I received an article from money.com which I also include a link to in the article, and I'll include that in the description below, where it talks really about the psychology and the methodology that they use for evaluating mortgage lenders or financial institutions that provide an opportunity for you as an individual to refinance that loan. And personally, I found the article to be really telling, because not only is there a scientific or an analytic approach for the evaluation of whether or not a financial institution had a steady finance or banked balance sheet, and also customer service. Also, it included a discussion about the interest rates that these financial institutions would charge you, and how the refinancing and the document requirements of those institutions. Rating these, as money.com does, really gives you a sense or direction based on your loan type that you can then parallel that with a conversation that you'll be having with a mortgage lender. What I'll do is I'll leave the contact information for Ryan and his team below in the description, so that way you all can reach out to them directly in order to set up a time to discuss what is going to be the best route for you. At the end of the day, even if you're looking 3, 6, 8 months down the road for buying a home, the name of the game is putting together a plan so that way you're in a position to be successful. So with that said, go ahead and hit that thumbs up button, like the video, make sure you subscribe and hit the notification so you can stay tuned in tune to the latest and greatest real tea here in the DMV and everywhere else. Stay tuned, and I'm Brandon, your trusted realtor, and I'll talk to you soon. Take care.